To everyone, and welcome to another good moment. Please, I just need, like my custom, that I need one or two people to tell me if you are hearing my audio and you are seeing my screen, so that I will be on the same page with everyone. Just two people is fine.
Loud and clear. Good evening, sir. Yeah.
Good evening. Thank you very much.
All right. Loud and clear. Very clear.
All right, sir. Okay. Okay. Today is not our normal classes, guys. Today is just a premiere of another software that I just created. I remember I told some of you that I trade Deriv. Deriv is I volatile asset. So, and my culture is I don't behave like other people in the industry when they will force people to, or they will just sugarcoat a software or a program for people to be buying. Yes, I make income from selling products, forex products. But I don't force anyone. So before I sell my product to anyone, I want you to see it. I want you to check it and see if you have personal conviction that it's worth spending your money on. I don't want people to be buying things that they don't need. It's not easy to waste money. And I don't want people wasting money around me. Because my culture, I respect money so much. So, and I don't want a situation whereby I respect money, but I would now start creating a system that I'll be using to siphon people's money or duping people by lying to them. So everything I'm showing everyone is what I'm using personally. Though the beginning might not be easy for you guys, because for me to reach this level, it's not a day job, it's 24 years experience I'm sharing with you. But if you can manage and force yourself to understand all the concepts, maybe by the next 1 or 2 years' time, you can be comfortable the way I am comfortable today. So now, today, we are going to move to a class where I'm going to premiere my software, and it's not a mainstream forex. This is a synthetic asset. And I will never lie to any one of you on this platform today. I will tell you exactly what you need to know according to what I know, my understanding about what is called synthetic assets. So first of all, let me share the table of content with you guys so that we know every one of us will be on the same page. Okay, so I've done this. Okay. Please, did you see the table of content? If you see, just say yes, then we move on.
Yes.
Okay, so we are going to discuss, number one, what is synthetic asset and why are they different from mainstream forex? Because they are not, it's different thing. So number two, we are going to talk of how to pick assets to trade in relation to our capital. How to trade boom and crash, because the software is only for boom and crash. If you are the guys that have been trading for synthetic asset, you know that volatility is part of it, job is there. A lot of things that this company created for people to make opportunity from, but they are highly risky assets. They are highly risky products. But I won't lie to you. If you can be calm and control your emotion very well, you are going to make money from it, because I make money from it. So we move to question, number 4, we discussed about time frame, which time frame is better to trade boom and crash. Then number 5, introduction to BC Scar Pro robot. It's a robot that I've been using from 2016. So then number 6, explain demand and supply signal indicator, because all my software comes with trading zone. So I'm going to explain. Actually, I'm supposed to put explain that's number 6 to be number 5 and number 5 to number 6, but I will rearrange it because demand is very important before we talk about any other thing. Then after that, We now move to practical of the software, where I'm going to use the software on the server, and you see the setting. I will explain the settings. And after that, we finish the setting. I will demonstrate the trading for 30 seconds, just 30 minutes for us. Then I will give opportunity for us to have 30 minutes question and answering, and we end today's premiere like that. It's a premiere of software. So it's not that we are having normal classes. Our normal classes will come from October because I need to rest. Guys, I need to rest. I just need to rest. So now let's move to discussion number one. So what is synthetic asset, and why are they different from mainstream forex? This is just a discussion, so I don't need to share anything with us on the screen. Guys, synthetic assets are designed by a company called binary.com. This company is not called Deriv. If you are new to the system, if you are new to the industry, you will know their name as Deriv. Their name from 25 years ago is called binary.com. I joined this company long ago. I think about 20 years ago, I signed up my first account with them. We trade binary on there. But this company, they have a lot of good programmers, software engineers. So, and what did they do? They mimic the movement of the mainstream forex to generate this asset. This asset is 100% fake. 100% fake. And I won't lie to you, you can never see any broker having this asset. Boom, crash, volatility, jump, all those nonsense. No broker has it because it's not real. So when you want to trade it, you have to trade it with the mind that is highly risky. Because whatever thing Deriv did with your money, you cannot query them. They have access to blow your account at their own time if you are not smart enough. That is why you see this asset trading on Saturday and Sunday, because it's not real, it's fake, it's computer algorithm. So that is why sometimes when people say robot doesn't work, I laugh because they don't know that robot is what you are dealing with. And as a woman being dealing with a robot, you have to be extraordinarily intelligent to beat a robot. Yes, the best computer in the whole world, the best computer in the world is human brain. But when human brain now creates a robot, the robot is more faster than human brain because the way we think is a little bit slower than the way the robot will think. That is why I don't do anything in my life. Since about 16 years ago, I always base my life on robots. Anything I think, I write it down and I code it so that it can be faster than me. And robot doesn't think about food. They don't think about sleeping. They don't think about anxiety. They don't think about they want to buy a car. So me as a human being, there's a time that my thinking affects my results. So that's why I normally look at people that think that robot doesn't work as somebody who doesn't understand anything. You can see robot is flying plane. Robot is doing surgical operation for people now. Robot is translating any language to us, hologram. Robot is carrying human pregnancy of today. So AI has taken our world. So the way we are going to use it to our benefit is the way we're supposed to be looking for. So this asset we are talking about tonight is a computer algorithm asset. They don't exist. And they are very, very dangerous assets to trade. They are very, very dangerous assets to say that I won't trade, I won't lie to you. And they are very sweet assets to make income from if you have the adequate knowledge. People that put 1,000 in their account, they would not $10,000. But I won't advise anybody, I won't say anybody can make such, because you remember your experience in markets, your your ability to think, your ability to be patient, determine your result. Your greed level, your patient level, determine the result. So that is how I'm going to stop on discussion number one. Please, if you have anything you want to ask me at the end of the class, which is number 10 in the series, please, you can be writing it down. I think I'll give one question per person. So write it down so that you don't. Now let's move to number 2. How do you pick assets to trade in relation to your capital? I think that one we need to share the screen of Deriv itself so that we can see how. Am I okay? I'm scared. I thought I've shut that thing, but it's okay. So let me see if in FPS no Deriv. Okay. So this Deriv's page. Please, if you see this page, can you tell me you see the page, please, guys?
Yes.
Yes. Yeah. This
Yes, we can see it.
Yeah, this is a page we are going to talk about. So you see, many people trade that. How do you know what amount to trade with? And I mean, particularly if you have this social amount, how will you know which asset to pick? I'm going to talk about this briefly in this Premier section. But if anybody that are started using this software in the future, you come to my class, I'm going to reveal a lot of things in the class that will let you have confidence about what you want to do. Okay, now if you look at the right-hand side of the screen, where they calibrate numbers, if you look at this boom 1,000. If you look at the price as at now we are talking, the price is 19,000. 19,000. Even me, I have a book beside me here. So please, guys, if you have a book, there's sometimes you need to write something down. We have 19,509.1570. That is the price, unit price of boom 1,000 now. Now, let's say you have $500 you want to trade. And you saw the price of assets at this level. My first thing that I would do as a trader that understand what I want to do is to search through all other assets. Let's go to Boom 500. What is the price? As at this night, the price is 7,352.464. Then let's go to Boom 300. Boom 300 is 1,107.432. Now, that is according to Boom. If you look at it, you can see that the most expensive asset as at this night is Boom 1,000, followed by Boom 500, and followed by Boom 300. Because if you look at the unit price, one is 19,000 plus, one is 7,000 plus, and one is 1,000 plus. Then I'll go to Crash 100 and Crash 1,000 also. If you look at Crash 1,000, Crash 1,000 is this night, as at this time, we are talking 6,553.8750. Then let's look at Crash 500. Crash 500 is 4,392.999. Actually, it's fluctuating, but it doesn't really matter. Just need something to talk about. And if you look at Crash 300, Crash 300 is 5,752.299. So if you look at everything, you can see that it's on Boom 300 that's most cheapest asset to trade. So this is the way I normally choose what to trade, because I want to trade something cheaper depending on my capital. If my capital is too little, I want to trade something that will not harm me, that will not harm my capital in time. But at the same time, if I thought you choose Boom 1,000, which is the most expensive, there's a security in the software. Because if you look, if people that knows me that I trade hedging. So in 2022, the software doesn't have hedging facility. But at this night, after like a couple of 1 year, I managed to code hedging strategy inside the synthetic asset robot. So, and if people that have been trading with my robot with Mainstream FOREX, they know that I always hedge. So when you hedge, it's difficult for you to blow your account. I always tell people. The only thing is you must have a patient. So now the robot came with hedging strategy now. So let's say you have $100 and you want to take opportunity of the market. $100 is very little. But if you know how to manage your money management risk, all the risk we have taught in our previous section class, you will know that you cannot blow that $100 easily. So now, what are we going to do? Is if you want to have a little relief, you pick the cheapest asset whenever you want to trade. Before I go on, let me quickly show us something here. How do you secure yourself? We can see volatility index. This robot will never trade volatility. Don't let me lie to you. Don't use this robot for volatility index. Don't ever try it. The volatility index, you can use the same robot. I'm going to premiere next week for Mainstream FOREX. That one can trade volatility. But this one we are talking about tonight, we are premiering tonight, cannot trade volatility. For example, I will talk detail in this in the class, but I just want to give us explanation. For example, if you look at stop level of the Boom 500 is 400 points, and if you come down a bit, all this information, many people doesn't know that it's very powerful, and minimum volume that you can trade on Boom 500 as at this night is 0.2, and the maximum volume you can go is 50 lot size, and volume step is 0.01. That means you can trade 0.21. I mean 0.2 to 0.21. Excuse me, guys. I'm sorry for that. Volume limits. These are the volume limits. All these things have very vital meaning, which I'm going to expound in my class for people that want to start using the robot. So, and long have a swap, and short also have a discount swap. See, and the good thing about one of the good things I love about it is that on Saturday and Sunday, I normally come and sit on my system and make between $20 to $100 every Sunday or Saturday. And even in South Africa, $50 is as at this night, I think $50 is 900 rand, which is a lot of money to play with on weekends. So if I get that 900 rand, I quickly go and get my cold beer and relax my mind. On Sunday, I come and sit in front of my system again and pick like 500 rand or 1,000 rand or 1,500 rand or 1,800 rand. 1,800 rand is $100. I don't know which country you are looking, you are watching or you have done, but understand that if you can make $20 to $100 on weekend within a short period of time, because I'm going to demonstrate it for us before we close this section. If it's very important to you, then I think this be a good product for you that you need to give attention to. And if you are trading mainstream forex, let me tell you a top secret. This asset is very, 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 very volatile, very, 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 very risky. I won't lie to you. But we get all the logic with my software. When you come to make money from high risk, what do? You open low risk broker account, which is a mainstream forex. Then you'll be putting your money there for steady and little growth per month. So that is why I even come to that. Okay, let me show people how to do this business of high risk and they keep the money with a low risk. Because low risk will retain your capital. High risk will put your capital into big risk. So please, any money you are, if by the end of the day you join Deriv platform, synthetic trading assets, please, any little money you made, please take it to Forex Mainstream and keep it there for security. No matter what happens, don't bring it back to synthetic assets. So this is how I will answer everybody. People are messaging me also. I will answer everybody during the Q&S section. So this is the way I normally use to pick my assets. So because I don't want us to take too much time, let's go to question: how to trade boom and crash. Guys, the same way you have been trading forex, that's the same way you are going to trade boom and crash. But the problem of boom and crash is, if you look at the name, boom, crash. Boom is like a bomb, and you know what does bomb does? Bomb destroy life, and crash is like a deadly thing. Also, when they say something crash, that means it's a deadly situation, like a maybe aeroplane crash, plane crash, whatever thing. So that they have already, Deriv have already told you that this asset you are going to trade is like a destructive asset. But if you are smart enough, you will come out with smiling every time. And the funniest thing is, with the kind of tools I'm going to introduce to you tonight, you can never, 99% assurance that you can never lose your money. I can guarantee you that. If you follow instruction, if at all you don't make money, you don't lose your capital in time. Okay? So let me move to question 4. Section 4 again. Which time frame is better to trade boom and crash? Guys, I've met a lot of Deriv traders, even though they don't have a good story to tell me, but I realized that most of them, they traded 1 minute, which is what you are seeing on my screen. This is 1 minute, this is 5 minutes, and this is 15 minutes, this is 30 minutes, this is 1 hour, 4 hours daily, weekly. But I've seen that people that traded, I will tell you, if I want to tell you my own opinion that is working me. I started from daily time frame. And you can, if you look at my chart, you see a lot of lines, which I'm going to explain to every one of us why these lines are there and for what purpose. Okay? So if you come to the daily line, daily time frame, you are going to look for what is a zone. How do you check the zone? I've already designed software that will check the zone for you. The only thing is you have to understand the zone. And once you understand the zone, you know that between this zone and this zone, that is where you want to take your risk. And 90% of the time, that zone are holding. Before I said I want to premiere this software, I 3 weeks to see if there's a lagging. And don't let me lie to you. I won't sugarcoat anything for any one of you. There's no 100% solution to trading. But if you are smart enough, there are good, stable trading tools that you can leverage on, like mine, and there are many other ones we don't know right now. So by the time I show you everything, all the people that want to partake into getting the software, we are going to have classes which are deep about everything. And if you have been calling into my class, you will realize that I normally use live account to train people. I don't use demo because I must be making that money that I want to show people that they should come and make with my tools. Okay, so now time frame, go to daily, minimum of daily, get your zone. Then when you get to any time frame, you go and execute. And I normally tell my people to stay on this chart frame for when to come out of their trading, when to come out from that trade they enter. And I will tell you the reason as time goes on in the stuff 5 introduction of the software. No, we don't want to. I don't want to introduce now. There's something I I've jumped here. Okay, explain demand and supply. Good. Now, if you look at my screen here, let me delete all this nonsense for now. Okay, you look at this. Okay, let me delete all this. This is the software that I've already helped you to plot the zone, the trading zone. But if you look at what we are looking at now, is always this zone are at demand zone. All of them are demand zone. And how do I trade my own synthetic asset? Is that all the boom I only sell. Boom, I only sell in boom. I've never buy a boom asset. I always sell a boom asset. And crash asset, I always buy a crash asset. So you can try your own way of trading it. Maybe you'll be buying the boom, you'll be selling the crash, or you'll be doing both. The software can do both, but the way I study the asset, I only sell in boom and I only buy in what do we call it? In crash. Okay. So yeah. So the first thing I normally do is that when I plot my zone generator software on the chart, I come to daily, then I come to my line choose, I put lines on them. I put line on those zone. This is where I trade it, because there's nothing to hide from any one of what is going on. Okay, sorry. So I put line on those zone. This line can work for you for a whole month. You don't need to put in it every time. Then I come to 4 hours. Also, when I get to 4 hours, when I get to 4 hours, I shoot my chart again. And 4 hours and 1 hour, I want to put them on this. I want to use the same line color. This one I'll just adjust it because it's very close to the zone on 4 hours. Then I put one zone on 4 hours. Then I go to 1 hour. Now on 1 hour, what I used to do is that I want to change the line color. I just use only 2 colors. I want to change the line color to something like orange or whatever. So I click and I come to property. Then I just change from white to any other color that I want to choose. Then change it to blue. Then I'll change it to blue. Okay. So then I put, and I'll tell you the reason why I do that. I put it there on 1 hour. Remember our daily and our 4 hour, which is a very big time frame, are on the same color. I don't care about those two. Then I do that. Then I blow up my chart back. Then you don't need to miss anyone. Just put this. All this line you are putting, you can use it for the next 6 months. For the next 1 year, you can use it. Not that that's the reason why we are using robot. Because even me, I'm lazy to sit down in front of computer to be working and be monitoring the stuff. So, but I don't do that. Okay. Now, I don't go to 1 minute. I come to 15 minutes. Okay. Now, when I see this blue line, I know this blue line is from 1 hour. Okay. So what I normally do is I will now come to this 1 hour line. I will look at it. And this is a boom as I just only want to sell. So I will look for supply zone only. And the first supply zone here is this yellow arrow that is telling me that the market is going to, the synthetic asset is going to be dropping. Okay. When it said it's going to be dropping, I saw 1 hour resistance on that side also. I want the candle. I want a candle that will break this 1 hour. Then I will enter the trade. I will start selling. I'm going to demonstrate everything for you guys. It's not about showing you pictures. Because everything I'm doing, I have confidence in everything I'm doing, guys. Okay. So now, if you look at it, we have some 1 hour lines on top, which we don't care about, because we want to sell, and you can see. Now, if you look at this level where the price is turning back to buy, you can see that it's a very crucial zone. So these are the places that I normally come out until when market break this zone, I'll start selling again. When it get to this zone, which is 50-minute zone, I will pause the robot. I want to see what is going to happen. Or sometimes if the distance is not too much, for example, this is based on experience, guys. It's based on experience, and you can only have experience when you practicalize things, which I'm going to show us now. You will see how I'm going to trade now with the robot. Okay. So now, when the price break this zone, I'll start selling again. When it's about to get to this zone, I'll pause the robot to see if the market will pull back or not. And sometimes when I look at the distance that is not too much, I will leave it because the robot can take care of some correction by itself. So, and when it break this, I will start entering market again. But you see, the most important lines are these white. I don't joke with them. All this white, which is 4 hours and daily, I'm telling you, within a couple of hours, you can make $500 on this light, on this zone. We are preparing the software, we are not in the class. So now, when you join my class, you see how we're going to do that. But I just want to give you some insight of how the robot works. Okay. So now this is the first thing I do on my chart. And I don't see it with my computer. You don't need to see it. Just do all this. And for example, now let's see where the market is. Market is here. Okay. Market is here. I can say, okay, if market get to this zone, I want to start trading. I want to start buying, selling pool, or the market get to this. I want to start um, selling pool, or market get to this line. I want to start selling the pool. What am I going to do? I'm going to create a lot here. So let me create a lot in front of you. I don't pick this line and I say, sorry. I look at the price. Let me check this. This color is I didn't see the price because I'm using glasses, so I'm so sorry, guys. Okay, now I can see the prices very well. I can just come here. There's a way to do it, but this is the way I'm going to do it in the premier class. There's a way to do it that you do it, you work out, you go and do your hustling job. Because I used to tell people on Saturday and Sunday I sit in front of my computer. Monday, Tuesday, Wednesday, Thursday, Friday, I see also. If anybody is showing you Lamborghini that you should not also go and fire your boss and come and trade, that person is your enemy. Oh. Don't listen to those guys. I'm not going to lie to anybody that is following me. Go and do your primary job while you are trading. It doesn't affect each other. Okay, now I'll come to this and I'll say, no, I don't want to use sound effect. I can use email and I can use notification push on your phone because all these things will be on the server. I will demonstrate how you're going to put it on the server tonight, but I will install it on the server, but I will demonstrate it. So now, if I put notification, that means if I thought I'm not at home, I will get alert on my phone that my predetermined price of boom has been reached. The next thing is I will not even give it second thought. I will place a sell on that level. And now you pick the symbol, which is volatility, 1,000. And when we say, what we want to say here is we want to see boom um, greater than, we are going to use greater than now, greater than bid value. Bid value is 119,811.5301. Trading is very sweet if you know what you are doing. Please, guys, don't care about learning candle pattern. If you are following me, I don't have time for candle pattern. I just do arithmetics. So when you put it like this, then you sell or you do everything. Now I can say test. If I say test, let me see. Okay, June test because I use notification and I didn't say. If I use sound, if I say test, you see to give me a sound alert. But sound alert is if you are very close to your PC or you are very close or you are in the house, you are watching your Netflix like me. I'm a Netflix worker. What? I don't go out unless I want to go and do meeting. I can use sound and to tell you that what you are set is. But if you use this notification, there's some parameter you need to set, which I'm going to train in the class. For example, you come to tools. Let me give you that for now. You come to tools and you come to option. And when you get to the option, you come to notification and you set all these parameters. They are very easy to set. All these parameters will push alert to your phone, your mobile phone, anywhere you are. If you set it in Nigeria, you go to Australia, it will set to you in Australia that the price that you want to sell to has reached. So, but I won't continue here, I'll just show you that. So now, like I'm saying, I'll set the alert. Let me quickly create the alert for us. Then we say sound, and then we pick asset, which is book. Okay, from 1,000. You click on it. So now, if you look at here now, you can see that it has set the alert. Okay? So you don't need to sit in front of a computer. And when the alert came, when the price came here, you get the alert. Count. Then you trigger the software that sell. When you sell, you come to this one. You tell the software, you put alert here that when price reach this zone, you want to get alert so that you can pause the software because you want to see what is this zone is going to do. Is this zone still going to hold or is going to break 1 hour resistance? You know, I mean, the demand zone. What is a support zone? Is going to break it because we have 15-minute zone and we have support. Support line from 1 hour here. So you don't need to do much. Guys, if anybody is selling software to you and they are telling you that just plug it and don't look back at the end of the month, come and fetch money. That is why a lot of people are blowing accounts. I will tell you the best software in the world is a software that is flexible for you as a human being to make some decision and the software implement your decision. I've never written a software that will do 100% thing for me. And that is why when people tell me software doesn't work, I will tell them what type of software I will be using. The super machine computer in the whole world is human brain. So all this, you have to understand them and you apply robots. Both of you will be working together, but now it's not on the stressing mode. You can go out for the whole day, robot will complete other things for you. Okay, so now having said that, this is the way I would do to trade here. So now, if I go to book 500, I will search for the same thing. And if you look at book 500, you can see that this is a risky zone for me to sell. This is a demand zone, and market will start booming. And when it's booming here, it's going to be going against me. Though the software can correct this booming to some extent, and if the power go beyond the software will do what? Edge. And what the edge, you open second chart and you start trading second chart. All those ones, we talk about it in the proper class. So now we want to attach the robot to the chart, which is 7, and the third we do the settings and we demonstrate trading. Okay, before I do that, let me quickly show us how I used to do it. Like this alert, once your computer shut down and you don't have internet on your computer again, this alert will not work. So that's why we normally use what we call PPS. PPS is free for 1 year. You buy the software I'll show you how to set up your free VPS that you are going to use to run your software for 1 year. So let me quickly take us through that. I don't know, maybe this thing will permit me, but let me quickly take us through that. Okay, so now when I come to, because I have I've done that download folder. You come by. Please, do you see my download folder, guys? One or two person?
Yes, sir.
Okay, so I've prepared,
Yes.
I've prepared this folder for every one of us, and this is the VPS I created. To create a VPS, it's just like 10 minutes to create your own VPS for 1 year for free. Most of the people buy my software knows how to do this because I guide them how to do this. It's possible. So now, inside uh, the what do we call it? The VPS, I will launch it. I don't know, maybe you see my VPS now, guys. Did you see my VPS? No. One or two person? Did you see my VPS?
So it hasn't loaded yet.
It has loaded. Okay, maybe you don't see it. Let me come to show us the VPS. I just click on it. You can't see everything anyway, but I'm recording. I'll drop the recording for you. But now you're supposed to see my VPS, right?
We see it now. Yes.
Good. So when you see my VPS now, the only thing you need to do is to go to Deriv, copy the download Deriv app from their website. Then you come to, okay, this one is gone. Then you come to your VPS like I'm doing now, and you paste Deriv app inside your VPS. Okay. You can see now I'm pasting my Deriv application Meta 5 because you know Deriv is only synthetic is only on Meta 5. I put it on Meta 5. So I copied the Meta 5, I download it to my local laptop. People that have been using my software know all this processing, but I can see that the number I'm seeing tonight, some of us are not here. So now I'm going to install it in front of every one of us. And when I install it, I'm going to I'm going to use my local laptop to demonstrate the installation of the software. So we are installing the Meta 5 inside our server, not inside our local laptop. But after you install on your server, then you can come and install a copy on your local laptop and you sign up, you log into your server, you log into your local, to the account on your local laptop also. So now we have installed it. You can see Meta 5 is already installed on our server. This server is free for 1 year. If you know how to do it, which I'm going to teach anybody who are using the software, because I use this to support everyone that's using the software, because Robert cannot work without a VPS. And for you to buy VPS of this capacity, you're going to pay $180 per year. So now, are you sure? Yes, I want to do it. Now you can see Deriv is already, excuse me, on this server. Okay. Now, what is the next thing I want to do? I want to log into my Deriv account. I would say current existing, though it's demo. I won't lie to anyone, it's demo account. So let me try to see if okay, it's like I see I have my demo account open. I'm copying. If you set up your server very well, you can do copy and paste between your server and your local laptop. You can see I pasted, then I put my password, then I put it's a demo account, then I click on OK finish, and you can see inside my server, you see Deriv account will be logging. This is the same account I'm showing you on my server, and I'm going to close all this because I want only what I'm trading to be on the chart on the Deriv. So on the server, this is a new server created it for the purpose of this class, so that let me see new charts. Okay, now what I'm going to do is to come to control. I need to come to markets. Yeah, this market watch, Control M. Then I'll right click on it. I'll say show all assets because you can see it doesn't show me boom and crash. Then I'll come to file again, come to new chart and come to boom and crash and boom or whatever. Then I click boom 1000. You can see how sensitive computer is. These are the trades I've been doing on boom 1000 for the past 1 week. It shows it, but I don't need to do anything here. Anyway, so that's the way you move your boom. I mean your Meta 5. You download it from Deriv to your server. This is my server now. I'm going to abandon this server now. I'm going to come to local computer. I just want to show us briefly on that, so that I think this one's actually now I'm going to demo. I think this one. Okay, now back on my local laptop. So now I've explained demand and supply. Okay, let me explain demand and supply better for some of us. You see this zone, I love trading on this zone. And I will advise every one of us after this class, you can go to YouTube and or Google and say trading in the zone. There's one book written by Mark Douglas. I think the guy is late. That book helped me a lot about trading on the zone, because all the banks, institutional traders, they trade on the zone. They normally trade on the zone, and that's why all my software, since I read that book, all my software are zone trading software. Okay, so that's what I want us to just brief to know. So now let's now do setup on my local laptop, on my local server, which is this Control N. So now we want to trade. I want to put the software. Now let's see which one. Okay, let's see which one that gave me opportunity to trade, like what I'm preaching to you guys. Look at this 1000. It's already on the support. I can't, and I told you when I'm on boom, I'm selling because I don't want to trade spike. Some people like trading spike, but my experience, let me share with you. In 2022, me and most of my friends, we are trading Deriv. All my friends that are trading spike, none of them win. I only trade trend, and I withdrew a lot of money. So I don't trade spike because I've created a system that will sustain my spike if it happens. So now let's look at boom 500. I can trade boom 500 also because you can see the opportunity we are seeing here is to buy, and it's a boom. So I come to boom 300. I can't do anything here. I will not even try to sell because you can look at this zone is a demand zone. So let's look at a crash. Okay, crash, I'm always buying on crash. But if you look at crash also, I would have loved the price to be on this white line, because I marked this white line before I will start buying, or be on any of these demand zone. Demand zone where you buy. But let's see, if you can't see anyone, we are still going to trade. Okay. Now, if you look at this crash 500, if you look at it very carefully on 1 hour chart, it's already on demand zone. Let's look at what is happening on daily. If you look at on daily, I tell you, when I'm crashing, when I'm buying, when I'm trading crash, I want to buy. But if you look at on daily, look at this white line. That means the opportunity to buy is almost exhausted. I have 74,647 points to buy. Okay? But let's leave it like that. Let me come to H4 rather, and let me scroll back, and let me come to this. You see that is very close also. Then let me come to H1. H1 always tell me that the distance is far a bit. Look, it's telling me it's far a bit. Okay? Then let's go to 15 minutes. Let me just check. Because I check this thing, because only when I check, I can make my decision, then I'm able to start doing what I need to do. If you look at it, 15 minutes gave me opportunity a bit to take this decision that I want to buy crash, but I will have loved crash move closer to this white line, then I will start buying. Okay? But still, like I told you, I want you to see the power of the subject we are talking about, but that doesn't mean we have to do everything carelessness. Carelessness. So now we come to this, we can buy. Because you can see prices inside supply zone. You don't buy to supply. It's a rule of trading. You don't buy to supply. You can see that it's like everything is tight. You don't see opportunity like that. But what I'm going to do now is I'm going to buy crash 500 here. Or I should just yeah, let me see 1,000 first. 50 minutes is a little bit far. Let's check 1 minute. 1 minute. I'm going to use 1,000 for our example. So now what I'm going to do is this is a chart, this is the robot. I'm going to put the robot on the chart. The robot needs my email, the robot needs the token, and I'm going to on boom, I'm going to sell. Stop trade. This stop trade, what does it do? If you are going to stop the trade, maybe your trade is getting closer to what we call in boom, it's getting to demand, and you know demand zone is not a zone where you can be selling. So you come here and change this place to true. So what does robot do is that when robot is now see that you have set the stop trade to true, it will make sure that it close the trade that is open at profit and it will never open any other trade again until you make a decision. So that's what this one is doing. Add close. What does add close do is that okay, because you just feel like okay, boom is now on demand zone. So I have some trade open, I make like $50 and my float is just $15. Okay, as a good trader, let me just close the $15 and wait for good opportunity. Then you use add close. It's going to close every open trade at loss or at profit. Okay, that's what is done. The magic number is always, I always like to put one in magic number. So we put one in the magic number because we are going to run this software now, and you see now we are on option 8 where we do setting and functionality meaning. I'm telling you the settings and the functionality meaning. Okay, so now here we are going to put our capital here that I've been using my software for trading forex. You understand this? Then this lot size, minimum lot size of book is 0.02. Maximum lot size, you can do fixed, you can do FIBO, but in Deriv, if I have like this example, I have $7,000. Okay, so I'm going to put one here. Maximum lot size, I'll put one lot size there. Then because I have range of lot size, I'm going to use Fibonacci something. Then we must put this one. Next order, you put on pen. If you put it on market order, because it's boom and crash, it's very fast. So most of the time, you are not going to get next trade all if you put it on market order. So I would advise anyone that wants to use the software to put it on pending order, which you are going to see when we are running it. Then this distance depends on you, and I will show you how to get the distance. But I normally use 35,000 points, but I'm going to show you also how you're going to get the distance. So take profit. Now this is where it's becoming tricky because this asset is very volatile. We want to take all the opportunity we want to take, and as a computer generation asset, I will tell you 0 and 1 are the best switch number in robots. So I remember this asset you want to trade is a robotic asset. It's not a normal asset. So I normally tell people that any profit you want to put here must be odd number. Odd number. It must not be perfect number, which is even number. So what do I mean? What do I mean that? your profit must be 1, 3, 5, 7, 11, 13. You understand? So now what I normally do is I normally use 0.45. And what does that mean? No, I will use a point. I'll come to use, I put 0 in point, then I'll come to use it in dollar, which is 45 cents. Sorry, 0.45, 45 cents. So that means every 45-cent profit, the robot will close my profit. The robot will close my profit every 45, and you can use 47, you can use 49, but don't use 50. 50 is a random number. And why am I saying don't use 50? You know, I'm telling you, I'm sharing the experience. Many times when you want to hit random number, that's when the spike come out. And when the spike come out, Deriv doesn't close your profit in milliseconds. They delay it a bit. So let's say the robot has closed your profit at 50 cents, and this spike come out, you just see that your profit now will not be 50 cents again, it will be minus $5. Because spike came out when the robot is closing profit. Deriv will not record, they won't record your profit, which is 50 cents. They will record the spike value for you. So, and in most cases, 90% of time, odd number won, even number fail. So I can say you can even use 49, but in most cases I use 45 for my own trades. So I just need to give you, and some people you can use 91 0.91. Depends on what you want, but like we know that there is a spike asset. I mean, Boom and Crash is a spike asset. So we want to quickly grab whatever thing we want to grab at a very fast pace. So I use 45. I'm not saying you should use 45, but I use 45. But what I want to tell you is don't use anything above $1. Please. If you want to be taking $2, $3, $5, we are going to waste your time. Take it as small as possible, consistently. We are going to see it when the robot is running now. So martingale level, take profit, I take profit is first. Martingale level, put it on 99, and risk level, I'm going to change this level to become 2. Why am I putting 2? What I'm telling the robot is that, robot, I want you to make 45 cents per movement. But immediately, market spike against me. Then I'm going to put second trade on. I don't need a profit of $45 45 cents anymore. I just want you to close it as fast as possible. So that's why I said second. If you put 5 here, then you are telling the robot that when I'm losing for the 5 times, then I want to close fast. I don't want to lose. I mean, sorry, it's not loss. But when market moves against me 5 consecutive times, then that's when I want to take action. But me, I don't wait for that. Because the risk is a very risky asset. I just want a robot to say, okay, immediately my first target doesn't hit, I move to the second risk. Please just close at any profit. Now, and that's why I put 2 here. Then I will now come to risk level close money. I will say close at 0.01. Break even. Break even. That's what I'm telling the robot now. Break even and start afresh the trade. It will close it at loss, but it will close it at break even. Now I come to what you call use smart close. I want to make it true. Then the smart close after the second trade, I want the smart close to be $1. What is a smart close? Let's say with this, I'm going to treat this in very detailed in the class. Let's say market has moved against you 5 times. Okay, we have the last trade, we have the first trade. Then the robot will be monitoring the profit between the last trade and the first. You can see what happened now. There's a spike in the market. So the robot will be monitoring the first trade and the last trade. Immediately, both of them give you profit of $1. You will close the first trade, you close the last trade. That is what we call trimming. That is not what we have. We don't have that kind of trimming in mainstream forex. but I included it in Deriv asset. So that's what that one is doing, and I put $1 here. Then my maximum drawdown, which is percentage I allocated my risk, it should be 5%. So people that are trading using my software on a live account on the Mainstream FOREX, they will have understand what I mean by 5% there. So I want this thing to be trading 247. I don't want it to stop. Then I come here and I save all these settings. Let me see. There is okay, so now I see the settings where no, I don't want it inside template. Okay, let me see. Okay, let me come to beta codes. Let me come to the way they do beta 5 is giving me stress. Okay, let me come here. Let's see what is here. 5. I want to start it here. See, there's more. Okay, let me come here. Okay, let me come here. Load. I want to put some like that. Yes. So now I put it there. Then when it click OK, you see, because I'm running the software already on my desktop, on my laptop, so it doesn't ask for security code. If you are doing it yourself, it's going to ask for security code, which you are going to send for your license. But you can see that I started placing the trade and selling, and it picked a random number from 0.3. So now let's watch how it's going to be trading. He has placed the first trade and he has placed a pending. Remember that if you remember here, in the software, I said we must use pending order. That's why he placed pending. So we are going to look at this for the next 30 minutes, guys. For the next 30 minutes. You have to see everything for the next 30 minutes, how the robot works. So we have 7,000 in that balance. We have 7,037 as our balance, and our equity balance is 0.70. So let's just watch it for the next 30 minutes. Please, you just have to have patience to see what the robot is doing for the next 30 minutes. 30 minutes time will be, look at the time so that we will not waste our time. 30 minutes time will be 10:39. So we are going to evaluate what profit has it made, how many times the market moved, how did he handle the booming. We are going to see everything in the next 30 minutes. Thank you, guys. Remember, our profit is 45 cents. Did you see what he did? He closed that 45 cents, closed the pending order, open another fresh trade. So this is how it's going to be trading until market starts. And when market starts booming, let's see how it's going to handle the booming. So that's what we're going to see. If 30 minutes permit us, we see the boat's action.
Inside of our confirmation area. We only, and I mean only, act on our initiative when we get our confirmation. And our confirmation is this. Our confirmation is when I say one, With one internal liquidity, done. With inside of our total interest, done. Once we get a lower time frame, so longer time frame, all that breaker structure and a market structure shift or a change of character, depending on the quality of the setup. Once we get the breaker structure and the market structure shift, that is when we act. Because what that tells us is, okay, buyers are controlling the market, buyers are determining the trend, buyers are controlling. We'll get into our institutional area that is protected, and then what happens? Aggressive selling steps into the market, takes over, and the log that buyers were previously protected has now been shifted. There's a market structure shift. Therefore, what is expected? Expected lower prices. It's quite simple. Essentially, the market only moves off supply and demand. But if there's more supply than there is demand, then price will drop lower to collect the demand. If there's more demand than there is supply, then price will trade higher to collect the supply. It's that simple. So, with that being said, we've just shown that we had bullish price action shift to bearish price action on a lower time frame. We're already bearish, so we're already expecting lower prices. We're just waiting for the lower time frame confirmation. Once you get that, again, it's going to be the same exact thing. Right? What we're doing is understanding market structure. Right? We have high, lower, low. Now we're bearish. We're expecting lower prices. We're going to look at that same level, right? It's going to be that same area where price ranges and then sells up aggressively. That's going to be our point of interest, right? Our institutional area of interest. It's the exact same thing. Then you're going to map out that level, and then you're going to take your trade. You're going to take your short position, open in here, and put your stop loss just above the high, and then you're going to take out the next swing low, or at least 5 risk to reward. That's our entry point. So just to really quickly recap, and then I'm going to show you a live example. Step 1, we're always looking for trending high. You identify the external swing points in structure, and if they're making lower lows, then it's bearish, then higher highs, and it's bullish. Very simple. The reality is that it won't look so simple. It won't just be high, low, high, low. You'll have a lot of these income structure points in place, but if you abide by the principles of understanding swing times and low, everything on the income will be fine. Step number 2, identify an area of range before an aggressive sell-off or an aggressive buy in a bullish market. When you get the aggressive sell-off, that is your institutional attention. You're going to identify the range. This is the transactional range. And that is going to be your point of interest. Step number 4, we want to wait for a build-up of internal liquidity on our way back up to that point of interest. And then we want to wait for it to be manipulated and trade into our point of interest. And the final step is our lower time frame confirmation. When we get in here, we're not trying to enter. We want to make sure that our bias is correct. And we do that by identifying the lower time frame structure shifts back in alignment with the 15-minute. And then finally, step number 5 is getting into the trade and then managing the position. When do you go very deep? When do you take our partials? When do you leave the stop loss? All of these types of things, that's what I'll show you in the next example when we go to the live chart right now. Okay, and finally, step number 5, you need to have everything together to show you exactly what we just learned in theory, take it over to the market and show you practical demonstration step by step. But just before we break down this incredible trade, this is the exact bias that I gave my inner circle members just a couple of hours prior on our live session. I was waiting for this exact setup step by step, and a bunch of members took the exact trade. If you want to be having insider access to these live real-time insights that I give to my members to understand price action, if you want the proof of participation or truth that are backed by years of data with trading plans, if you want psychology programs, multiple life savings, access to me and other mentors, multiple six-figure traders, then you can essentially apply to what you can download it. It's a form, you can fill it out. All that is basically don't accept everyone, but it's worth a shot, you know. And who knows, maybe we can work together. So let's go ahead and dive into this trade breakdown. So this is the exact trade. The trade was taken on the 18th of September, and as of recording this, it is the 20th of September, so 3 days late. And yeah, let's dive into it step by step. So what I'll do is I'll bring us back all the trade occurs as to why I was even looking at the setup, because in this green box right here, this represents the London session, right? 2 a.m. to 5 a.m. PST. That's my London session window. That's a session I trade every single day. That's a session that I trade with the members, giving my step-by-step playbook what I'm looking for. So when the market opened, I have my live session with the members, and this is the exact breakdown I gave them. So it's very important to understand that this blue box here, this blue box represents Asia session. Now Asia is notoriously known to be a pocket of liquidity. So when we were talking about setting the grid, that internal liquidity, I always use Asia. We can historically look back and you can see for yourself, right? Blue box, manipulation lower, manipulation high. Blue box, manipulation lower, manipulation high. Right? We can go back again. Not this time, but blue box, manipulation lower, manipulation high. Right? We can do it over and over again. Manipulation high, manipulation low. Manipulation high, manipulation low. So I really, really emphasize my understanding of Asia. Now, you can't just trade Asia without any context. There's a lot more to understand to it. But yeah, I just need you to know that so that when I break down the trade, it makes a lot more sense. So, what was step number one? So, step number one was identify institutional bias. We already had a higher time frame bearish bias in mind, but even a 15 time frame cut the line. So it's very simple. You can see that we have an external structure point here, and that structure point was broken. So at that point, we were bullish, right? We had a wave of structure. We were indeed bullish at that time. Well, the lowest point price moved back from this level was here before we got structure. So that was our swing low. That was our swing high. If price wanted to continue trading higher, it would have come into this level and traded higher. It clearly shown us that it doesn't want to do that. It broke the shrink the swing low down here. Give us a change of current, right? A shift in structure. So now we're no longer expecting higher prices, we're expecting lower prices. So what happens? You can see then we have the high, price breaks, there's no here, there's no pullback here, there's no pullback here. I have a specific rule for my pullback criteria, so that I make sure I'm never wrong on one. Swing high up here, and swing low down here. That is my structural range. And swing high to swing low. So when I come into London, the only thing I'm interested in is selling. So selling the one and sell with the price there.
What would say?
That's right there, that's wrong. I'm expecting that this low is going to be taken out. And before that, I will be expecting what? There's time to move through of the setup. So step number 2, identify an area of institutional interest. Well, what happens before we make that trip? Right? This is the aggressive bit. That right there is the momentum. That's when you see all of the orders initiate. We get our range. Our that right there is our and this would also consequently liquidate the high. So what happens in this book? Anybody know? If I look at the last time effect on a week, you'll see this. You'll see a lot of time you'll see it buy and an aggressive sell like this. In fact, if you go to the look at it, because with 5-day time frame, it looks what I look like. Right? Again, on the 5-day time frame, it's another look. Still a very aggressive buy, manipulating highs and then low. What happens if we look at this kind of 1 minute time frame? Right? If we put across and look at this on a 1 minute time frame, what does it look like? You can see it's a very aggressive buy. Above liquidity and then the aggressive sell. So that's our corporate interest. It's quite simple then that that's our range of initiation, just as we were looking at previously. So we have our area of interest, right? It also has a fair value vector. We have our area of interest. Okay, so step 1 and step 2 are both there. We have our bearish bias, we're expecting lower prices. We have our area in which we're expecting those lower prices from. Step number 3 is identifying our internal range of liquidity. That for me, again, is the ways of Asia. It can be equal high, equal low, if Asia really manipulated. But in this scenario, it's most definitely Asia. Right? My highest probability setups are where Asia is just sat before my point of interest. So we have liquidity here. There's our liquidity. And then what am I waiting for? And this is my bias. I was waiting for price to reach that liquidity, come into here, give a market structure shift like this, which is my confirmation step number 4, and then get into the market in here, and then take my profits at this low and at my bottom, right, which is what actually is money. So we play guys, we're waiting at this point, we're waiting at this point. Okay, so now Asia's been manipulated. So now my interest is peaked, my curiosity is peaked. What's going to happen next? Price gives a little bit of rejection, another rejection, still nothing from this point, still nothing. I need to wait for this. Now here's what happens to a lot of traders. see these rejections flow in, especially a lot of time. They're eager to be selling early, right? There's a bunch of different ideas here. Number one, there are the people breaking out, right? So the breakout trades, they're buying this level, and where they're putting their stop losses. If they're buying the breakout here, they're probably putting their stop losses down here, and probably targeting up here. So we know there's a bunch of stop losses at this low in here. Okay, cool. What about everybody who's selling off, right? Selling the resistance, selling the fake out, or the resistance, or the rejection at low high, right? What happens to them? They're selling it here, right? Their stop losses go. Their stop losses go above the high. Their take profits probably going somewhere within inside the trade. So it's all about building context to understand where everybody else's stop losses are, so we can understand where all the liquidity is, because we understand that the majority of the market tries to run toward that liquidity and then run away from it. So we want to make sure we're not caught in those moves. We want to make sure we're getting in after those moves. So again, I'm waiting. There's the real manipulation price. The moment the price touches this gray box, I'm using a lot of time frames. So now I'm thinking that. Now I'm dropping down to the 1 minute time frame. And I'm just following the structural understanding. I'm following the swing points. So what do we see? So we see a breaking of the highs. So we have a low, a bullish high, we have a pullback, we have a bullish high again. So again, I'm waiting for this low to be taken out. If this low gets taken out, that's my confirmation for lower prices. So if price comes to that level, respects that level, and then breaks above that level. Okay, no problem. So now we have what? Now we have a new low. Now, if this low gets taken out, that's my confirmation. And this is the thing why we have the confirmation. I'm not getting it early. I'm just trying to get better with the reward. Okay, so what happens? Both the highs, we'll wait for this one again now. Let's see. Okay, so now, what we've done, we've brought again above the middle high. So we have low, high, low, high. So now we need to see a break of this low. Again, see how I'm patiently waiting for the confirmation. Because what happens is buyers are controlling the market right now. But the moment the low that is going in control of the market gets broken, well, inevitably so, that is the shift of power. But we also notice again, before we do get a shift from one of these areas in the gray box, you'll start to see slower price action. What's happening is we are now currently experiencing a battle between buyers and sellers. Right? Essentially, when price starts ranging and not just moving in these prices, when it starts doing like this, as I've already explained, we're now entering into a battle with supply and demand, because there are lots of orders transacting at this one level. And then you can see the aggressive sellers come out on the market and we break the low. Right? That is our market structure shift. Okay, so where are we looking for? It's the same concept that we use on every other market. Our principles remain the same. What we identify here is what? The range. Right? What happens before the sell-off? If we start to look at the range and then the sell. It's the same thing that we're looking for here. This area right here is a range and then a sell. So our principles are the same. They're just understanding the price action. So that's our area. So what I want to do is I want to take my entry in here, and if I want to actually protect my stop loss, the best stop loss in the account, this is part of trade management. I don't care about just trying to optimize the reward. I want to make sure that I stay in the trade and remain safe. I take my trade, I cover the stock, a little bit of room for additional manipulation or spread or whatever, and then my first target and what I'm looking for is 5 per week. My first trade target is always 5 off, right? I'm at 5 times my risk. That's what makes this strategy so positive. Every time I win a minimum of 5 times what I'm risking to lose. So even if I take 3 trades and I lose 2 of those trades, I win 1. Then at the minimum, I lost 2 and I gained 5. So I gained net 3 off, right? 3 times I was, let's say I was $1,000 in a trade. Then if I lose 2 trades, I lose $2,000. When I win 1 trade, I make a minimum of $5,000. Therefore, it's extremely profitable in the long run. So again, what we're looking for, 15-minute time frame. I'm looking for a continuation structure, that's obvious. So I'm accepting this swing low down here to take now. So that's my overall target. But I always set a 5 reward partial profit. Because a lot of times you may be right in your idea of getting to a price. The price may come in and go lower and then trade high. That can absolutely happen. There's many other scenarios like that as which I won't go into in this video. But that is target number one, and then down here is target number two. Now I'm going to be fully transparent. I'm not going to try to manipulate the data or make it seem better than it was. I'm going to completely answer you how you believe in transparency. We get tagged into the trade. We get tagged into the trade at the space level. We manipulate this lower here.
Yeah, somebody said he wants the boom to happen. You can see that the boom has happened, and this is how it's going to handle the boom. Like I said before, please guys, are you hearing me before I will start talking? One or two persons?
Yes, sir. Yes.
Good. Now you can see that the boom has happened here. Even I want more boom to happen so that you can see how it will handle it. But if more booming is not happening, what is going to happen now is because we have set the let me come quickly there. Here, because we set the risk level to become 2. Now, this is 2 trades, okay? So now, what is going to happen is immediately the robot see that we have made 1 cent on these 2 trades, it's going to close all the 2 trades. Because now we don't need profit anymore. We don't need too much profit. We just want to eradicate the error and reset the trade again. So, and let's see what is going to happen. For some of us that you said is 1 minute, my robot doesn't determine the time frame you are using. What I explained about daily, 4 hours, 1 hour, 30 minutes, is just for you to look at the safe zone. At the safe zone where you want to trigger the robot. Okay? Even I can tell you, if you have enough money like 5,000, then even if you have $1,000, don't let me even say 1,000. If you have $100 in your account, you may not even check zone. In as much you are preparing to do what we call rollover and trimming, you don't even need to check a zone. But me, I love easy life. So I want to check a zone so that for the next 2-3 days I'm trading, I don't have any headache of hedging. So, but if you are the one that you are too lazy or you don't want to check the zone, you can just put the robot. And the good thing is when you put the robot, just come to here, which is maximum drawdown in percentage, put maximum of 5%. For example, let's say you put 5% for $100. 10% of $100 is $10. 5% of $100 is $5. It's too small. Let's say we use 10% of $100 is $10. Okay, still is too small, but let's just say we put $10. By the time market go against and spike and it's $10, that means you're going to have buy and sell at the same time. So the next thing you're going to do after that, I'm going to explain, but let's just keep on riding what we are looking at now. I'm still praying for more boom to happen so that some people will see how intelligent I program this robot.
We can see that we have this aggressive bullish candle moves to the upside. From there on out, what we're going to be identifying is this tiny candle just before the inclusive move, right? We call this the sell to buy candle. This is what is going to be characterized as the lower. It's essentially the area of price that first sells into the buy, and then we have the aggressive move out of it. Now, identify this, your order block should always means with the third week, right? So we have one candle, two candles, three candles. This week does not need this week, and that needs the gap, right? The fair value gap. If you can relate to that very well, then the likelihood is that it's an order block somewhere around that level. And how you identify that, we usually use the final down candle before that candle in a bullish order block scenario. Or what you can do is, if you want to identify a bearish order block, essentially what you want to be looking for is the final buy when you have the aggressive sell candle. But remember, candles of the first and third must not meet. In this scenario right here, you can see very clearly that this first candle and this candle right here, they look touch each other. Therefore, that does not give you a value. Therefore, that does not give you a bearish order. So that we continue going price out, what we will notice is we have a buy candle here, right? And then we have a sell candle, then we have another sell candle, and then we have a sell candle. Now, again, we identify this candle right here and this candle right here. That is essentially the fair value gap. And wherever there is a fair value gap, that is going to be ordered through there somewhere. So how do we identify that? It's just looking at candle buy, sell candle that forms just before that aggressive momentum. We've got this, we use the bottom of this and the top of this, and that will create your bearish order. Okay, so here are my three moves that I go to when I'm trying to mark out high probability orders. So rule number one, and arguably the most important rule, is you must be pro-trend. Time and time again, traders are trying to trade the bearish order blocks when the order flow is good. It makes no sense. So make sure that you have this external switch structure aligned like this. You can see the price makes low, high, higher low, meaning this low here is higher than the previous low, and then we have a higher high. So at that point, it's already indicated that price is bullish. We have this bullish breaker structure, like so. And the price is going to respect this area here, and I can guarantee you there's some type of order block inside of here, but price is heavily reactive. So that is number one. Make sure you are well trained. Number two is you want to make some sort of run on liquidity from that single level. So what you can see here, we have this bullish structure, then as price pulls back, see if it's income or lows it. Now notice this final sell right here, this final sell to buy.
Now you can see how the robot resolved that issue. I'm going to revisit it. If you look at here, this is two trades. This is where the boom happened, and you can see that if you deduct this from days, we are going to have 4 cents. Actually, inside the robot, we said we just need only 1 cent. Okay, but because boom is very fast, so for the time the robot will do the calculation and every other thing, it can be more than 1%. I mean, one cent. Most times it's 1 cent, 2 cents. But you can see in this scenario, it gave us 4 cents. And what does happen? The robot quickly resets the trade and start fresh trade. So if situation happen that it now spike, because we are going to stop the 30-minute. Look at what in that 30 minutes, what the robot did for us. Okay, so now what's the time? I think we still have 4 minutes. Let's look at that 4 minutes. Let that 4 minutes exhaust before we start showing us every other features. We have only 2 minutes to leave to stop the coding, to stop the thread testing. So what I'm going to do now is I'm going to go into the settings. You can go to your settings at any time. Then what we are going to do is we come to stop trading. Stop trading. We set it to true. Okay. Not add call, add close. Add close, we close it at the point we have now. But we set stop trading to true. And we say okay. You can see that it's still trading. But what happens is, anytime it closes this trade, it will never open another trade. So this makes it easier for us that even when we are not at home or we are going out of the house, we can put our robot to stop trading, and it's going to stop trading on our behalf without monitoring. So that's what I did that function for. In case it doesn't spike, even if it spikes, immediately close it at our 1 cent production trade. It will not open another trade. Let's see how it will work. Now you can see it closes the trade and it never open another one because we have put our stop trade to become true. Okay? Immediately I put the stop trade to false and I say okay. You see the robot will resume the work. Okay? You see. So now I'll come back here and I'll say add close to be true, but I don't want to close at negative because I want to show us something in what we have made so far. Let's say add close. Let's see if there's no spike for a few seconds for us to have break even. Now we have break even. Then we say, okay. You see, it closes immediately. That is the difference between stop trade and add close. So now, let's come back to what we had here. When we started, we have $7,037, and now we have $7,042. So if you look at it, we have in 30 minutes we have made $5 in this scenario. So let's say every 30 minutes we are making $5, and we have opportunity to let this software trade for 10 minutes, maybe 10 hours a day. We are not sitting with the computer, okay? So let's say 10 hours. That means there's possibility that we'll be making $50 every day, including Saturday and Sunday. And some situation whereby the software edge, let me show you how we are going to solve the problem of the software edge. Actually, the software will not edge. So now, let's say something happened, know, the software is trading now. Oh, false. I need to put false. False. The software is trading. And you can see here is magic number one. Let's say this trade on this chart is edge. It has edge. And when it edge, it was profit in time. So what we're going to do is we're going to open another and crash asset, which is new charts, crash. All this will be detailed in my class. But for now, let me just do that. Since I saw that crash again. So let me close this. Let me make it. I love plain charts. I don't know why. So let me use all this instrument. So I want it like this. So what I'm going to do now is to put the robot back on this chart. Okay. Load my settings. The settings I load it back. But now I must take my magic number 2 instead of 1. Then when I say okay, you see what is going to happen. Then I say okay. You see that the robot starts trading the second chart independently of the first chart. So the second chart will be making income when we are struggling with the first chart, like edge, to roll it over or to trim it. So if we are, you understand what I'm saying? If everybody understand what I'm saying clearly, you see that I'm not bragging with my research. This is not a common machine in the industry for now. This is not a common robot in Deriv industry for now. But the robot can trade from $100 above. And if you are the one that take time, actually when you come to my class, I'm going to show you soon. If your capital is too small, try to be patient and get the upgrade soon. You will be amazed what $100 can be next 2 weeks. And that profit, take it to Forex, where you are going to have a slow, consistent profit investment. So this is where I'm going to stop tonight. So and I'm going to attend to maybe a few question and answer.